Inflation is running hot. How hot? Smoking. That's right, smoking hot. But we've been invested in it for a while. Rather than complaining it, let's invest in it. Lots to talk about today. Let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First up, if you are a new viewer, I am a practicing financial advisor. What you see and hear here, I apply to our portfolios. If you find value, please do consider subscribing, hitting that like button, which helps us quite a bit. So, inflation is running hot. How bad? Forget about what the Fed says. If you annualize this over the last 3 months, we're talking 8%. But if you use the calculations from the 70s on CPI, we are double digits. Everyone is feeling it. No question. So we're going to talk about the inflation trade. We're going to talk about the markets. So we're going to start with, as always, big charts, sector spotlight, tell you where we are, what we're looking at, what keeps me up at night. Yep, there are a few things. The Fed. Okay, from there, we're going to give you a game plan. Let's go to the big charts. All right, before we get to the charts, we start with the cycles. We've been in cycle 2 since November. Growth accelerates, inflation accelerates. Very early on that call. But we're seeing a change coming in July-August timeframe. Now, as you can see, cycle 3, cycle 4, they share one thing, which is growth. Growth slowing. Now, you can look at GDP, earnings, but we have 30 factors that we track, okay? Each of those are going to roll over. The question is, does inflation decelerate, stabilize from where we are, or accelerate? Now, in the last day, you see Jamie Dimon come out, talk about it. John Paul Tudor Jones, one of the best investors ever, saying he's investing in inflation. So we're not sure yet, okay? Looks like deflation today, but as I said in the opening, we really are double digit in inflation growth. Who's not feeling that at the pump in the grocery store? This is a great time to focus on our OODA loop from John Boyd, okay? Observe, orient, decide, and act. What do I mean by that? There's a lot going on. Fed meeting tomorrow, Wednesday, recording this Tuesday morning. Lots of data, okay? Right now, we have a large cash position, which I'll talk about in a second. Patience is good right now. Cash is good. Let's go to those charts. All right, starting out, going to go quick here. Monthly view. Obviously, we're still positive. That's an easy call. Okay, the next one is the weekly chart. Change here, though. Very interesting, okay? Hopefully, you can see this. Down here, down here, we've had a negative crossover on momentum. That is MACD, M-A-C-D. MACD momentum change. So right now, even though, right, we've kind of been stuck in this box slowly, and I mean slowly grinding higher, this is right now, as of today, negative on the midterm charts. And midterms is 3 months or less. Next up is our daily view. What do we see here? Lots going on, okay? Now, the first thing is everyone's talking about all-time highs, but let me tell you, we have done this with absolutely anemic volume. I'm talking 20, 30% less volume than normal, okay? So I'm not 100% bought in here. You can see, right? Here's this short-term box that we've been in since April. Yeah, we're above it for the first time. It is not a breakout. Like I said, yesterday, we squeaked out at the end with very low volume. The other things we're looking for down here is the Volatility Index. Still in the 16 range, right? 15 to 20 is tradable. Below that is definitely very bullish. Above that, we have to be careful. Now, on the MACD, it's positive, but I actually added a chart called Stochastics. I'll put a link below to what that is. Basically, it's a fasting moving signal, okay, that allows us to see that, and that's kind of floating in and out. So right now, I am neutral in the S&P. That's why we've raised our cash position up to 15 to 20%, depending on the actual portfolio that we're managing, okay? All right, so another reason that we are neutral right now is what we're seeing underneath. So these are some new charts, one I haven't shown in a while, right? Here's your S&P. Down here, we have the 20-day and 50-day moving day averages, meaning those companies above and below, okay? It is very obvious right now when you look at these lines, okay? They peak and they go down. So here we peak and we go down, okay? So we're hitting all-time highs with less companies seeing strength, okay? This is your 20-day, that's your 50 days, meaning those companies above your 50-day moving average. So that's another thing that I see underneath the hood that has me concerned, okay? The other big one, which I have not used in a while, is new highs minus new lows. This is the overall market, okay? You can see here, okay? This is the NYSE. These are the new highs minus new lows, meaning new highs for the day minus new lows. And you can see as the market had gone up, new highs minus new lows continued to get higher and then peaked. That's a good time. That shows that we have strength in the market. But look where we are now. Yesterday, with making all new time highs, only 260 companies versus we're talking about 1,200 companies. So we're not seeing that strength underneath, which definitely has me concerned as of today. So next is the bond market, okay? This has been very interesting. You talk about the bond market being smarter than the stock market. So we peaked in rates, right, back here in April, okay? So rates went up because the bond market was predicting growth. And that's exactly what we saw in the last quarter. But then we started seeing a series of lower highs. Okay, that's not a good sign. That's predicting lower growth as we go forward, as I talked about in the cycles. Now, a little bit of a counter trend move, but we're at 1.5 today. We broke it last week. We're going to continue to watch this because the bond market is going to tell us first. Let's go to Sector Spotlight. All right, Sector Spotlight. Let's talk about inflation. If you get the dollar right, you get a lot of things right. All right, this is one of our moves we've talked about. And you can see the peak, okay, that was actually cycle 4, cycle 3, and here's our cycle 2, where we've continued to go down. Now, this weekend, Danielle Martina Booth, I refer to her a lot. She has a book called about the Fed. I'll put a link below. She's talking about the destruction of the dollar if we continue with all this printing and everything. So that's very interesting. But the idea here is pretty simple. Dollar goes down, inflation goes up, all right? And that's exactly what we're seeing right now, okay? Now, down here is the Commodities Index, CRB, 14 different commodities. Can't see, maybe Andrew will zoom in here, but we're up 100% since our low peak here a year ago, June. Hello, inflation. I mean, a year ago, we're talking $1.56 at the pump, $2.99, in Delaware. We're talking $5.99 in California. So that is definitively inflation, and everybody is feeling that every day. The biggest factor here is oil. This is one of our biggest holdings, okay? This is the monthly chart. I showed this our last video, which was a month ago. I said this is a very important line to watch. Why? Okay, that's your trend line going back to 08. Well, guess what, folks? We had a breakout in oil. Some people are calling for $100 a barrel. So the opportunity in oil is the price of oil, oil companies, ETFs, individual stocks, whatever the case might be. Master limited partnership, still today, a lot of opportunity. Just got to look for your opportunity. If you're not already in there, look for a buy-in, okay? So the next one, let's take a look here, is copper. We'll see, not looking good in pre-markets today, but copper, you can see the trend line, definitively a positive trend line, had a pullback. That was an opportunity for us to add back in the copper, okay? So that's another inflation asset. Think about building homes and whatnot. So lumber, a lot of talk about lumber here, up big time. Well, we've had a big correction here. okay? When you look at that correction right now, let's see here, right? Trend line still definitively in play. We've had pullbacks before, trend line in place. So that 3-month or less, short term, it broke trend. So I'm waiting, but this might be a good opportunity where you're definitively, when you go below 30 RSI, you're oversold. I'm waiting to see if we find a bottom here, okay? And if we can get an entry point to add back in here. Materials, talked about that. Same thing, we just had a pullback, good opportunity in materials, industrials, okay? Corn, wheat, there's so many. Just look up the CRB index and believe me, you can find a few. So the other one, we talked about treasuries, and banks has been one of our best holdings here in cycle 2 because rates have gone up, right? So the question is, will it continue? All right, so right now, as you can see, we're right on the trend line, broke its 50-day yesterday. A little bit concerned, did take some profits 2 weeks ago in our bank holdings. Want to see, is the treasury going to have one more move to the upside? Maybe, maybe not. We'll see what we do with our bank position. And last but not least, when we look at international emerging markets, we're not in emerging markets. You look at China, they're in cycle 3. They're actually talking about slow growth, which they never do, okay? But the EFA, which is international, continues to do well. So Germany, Australia, some companies were in the overall EFA index. You can see, nice little trend line. Next up, what keeps me up at night? Like what you see so far? Hit that like button, definitely gonna help us. So, what keeps me up at night? Unemployment, lots going on, okay? The big news last week was the JOLTS report. These are job openings. An astonishing 9 million openings, okay? Unprecedented, highest ever, okay? Now, with the unemployment picture overall, there's a couple different things that we're looking at, okay? One, labor participation continues to be low. Now, we've talked about unemployment. We're starting to see now 24 states have gotten rid of this extra $300 starting at the end of this month. So I would anticipate to see unemployment getting better. Doesn't mean it's going to help the economy. It's just those people coming off that 300. But again, like I said in the last video, they're coming in at a higher wage. Why? The other big news last week are record jobs where people are leaving, going to new jobs for higher pay, or just quitting the workforce altogether. So lots going on here with the unemployment report. Going to continue to watch that. Next, no surprise, I've talked about is the inflation, right? Just as we go to print today, producer price index comes out. All-time high again. Prices are just soaring right now. And especially when you look at homes, down here it's pretty crazy. These are from our friends at Hedgeye, right? So next is the Fed. The Fed is once again 100% behind the 8 ball, okay? Like I said in the opening, we're looking at double-digit inflation right now. That is a fact, okay? Markets await Fed meeting, okay? So that's what's happening this week, right? Last week, Yellen said higher interest rates would be a plus. Absolutely, positively no, okay? Think about it. Inflation is already in double digits. That's worse than any tax increase. Higher interest rates, how's that a plus? I'll tell you what, if they raise rates, that's when the market really gets hit, okay? Next, the Fed is risking a full-blown recession. The Fed is just way off their game. You have to be watching here. This week is going to be important. Are they going to stop? They're still doing $40 billion in mortgage-backed securities. Do we need that in the hottest home market in history? The answer is a simple no. All right, lots of digest today. I talked a little bit about inflation, right? So what do we do next? This is a time to be patient. I talked about cash, right? We took a lot of profits. Been very fortunate this year with our models, so I have time to be patient, right? Be smart. Not a lot of stuff out there that looks too good, right? Cash is king. We got a lot going on. And if we transition, you want that cash to hedge or to buy into the next cycle, which would mean bringing back gold and treasuries, right? Talked about selective. Volume and volatility. Volume has done nothing, like I said. The VIX is the big one. So much complacency right now. That's cycle change, right? Make sure you follow us on Facebook, etc. We'll keep you up to date to make sure you know what we're thinking so you too can be ahead of that curve. Thanks for watching. Michael Loftus, Wealth and Wisdom TV.